One of the most important things that we need to be aware of in this space is that although a lot of the things that we are seeing is extremely bullish and extremely exciting for us in terms of price action and how much money we can make by being invested into some of these networks, we also have to be aware of how big players like BlackRock are weaponizing the tech, and this is where things can start to look pretty dark. In this video, I really want to go over what BlackRock and Larry Fink have planned for us, retail, and almost anyone that wants to be a part of this tokenization journey. Everything that we are seeing around crypto today is supporting one of the biggest revolutions, which is the fourth industrial revolution. But this has a much more sinister outlook to it than you can imagine. And we need to go over this. Today, there's about $26 billion almost tied to total RWAs on chain. So tokenized value right now is almost at $26 billion. We know that this is going to grow. We know that tokenization is only going to become much bigger. We know that the networks tied to tokenization are going to become even more successful. This is not slowing down. It's accelerating. It's happening whether we like it or not. This is why I keep saying that we need to make as much money as possible in this space to make sure that we can live comfortably, help others, make sure that we have our goals set up as well, make sure that we are, debt free and have zero financial burdens tied to us. Because again, from this point on, AI is only going to accelerate, automation is only going to accelerate. We're going to see jobs swallowed up because of AI as well. And this is only supporting what we've been hearing about for years, which is, we'll have universal basic income and, we'll have everything tied to, this digital ID and things like that. Even CBDCs, right? For the longest time, we've talked about central bank digital currencies. And everyone thinks that this is no longer a concern because what we've been hearing is, a CBDC is banned in the US, right? Back in January of this year, President Trump signed an executive order to ban central bank digital currencies. This was huge. Everyone thought, wow, this is great. This is, awesome news. I agree. I'm not in support of a CBDC. However, the way that they got around the CBDC in the US is stablecoins. I said over here, back in January, well, is he going to just ban the term CBDC? Or will he ban the creation of a digital equivalent of the US dollar? These are two different things. Banning the term means absolutely nothing, just like Congress passing a bill to block a CBDC. The US will have a digital currency. It's inevitable. And it will be a stablecoin, which will basically be a CBDC. A CBDC is simply a stablecoin issued by the government/central bank. Stablecoins are also programmable. Every transaction is trackable and traceable, and restrictions can be applied. This is exactly why education in and outside of crypto is very important. Let's celebrate the banning of a CBDC, but embrace stablecoins. How comical. And yeah, because again, we already know that the US is embracing stablecoins. At the same exact time that this is what the CBDC world map looks like. We know that digital currencies are becoming a reality. We also know that a digital dollar is already here. We could see it in terms of stablecoins. Stablecoins become much bigger every single day. They already make up over 1+% of the global M2 supply. Fiat is becoming more digital than ever. But it's also at the same exact time that BlackRock continues to tokenize billions of dollars on chain. There's almost $3 billion on chain through the BlackRock USD Institutional Digital Liquidity Fund. We could see the networks that are tapped in here. And what's crazy about this is we also know that BlackRock is all in on the tokenization boom. We have over here, Larry Fink. The next step is tokenization of real world assets. $10 trillion BlackRock saw the RWA wave before anyone else. Almost as if they enabled it. But check this out.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, CUSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities around bonds and stocks and digital by having a tokenization. But the most importantly thing, we could customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stock. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. If you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own shares. We believe.
And did you catch that? Let's play it one more time.
Assets. If you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own shares.
All through a digital ID. This is why BlackRock continues to pump tokenization. They continue to get behind tokenization. Larry Fink put out an annual letter this year where he talked about tokenization heavily. In fact, a few of the quotes here: decentralized finance is an extraordinary innovation that makes markets faster, cheaper, and more transparent. Yet that same innovation could undermine America's economic advantage if investors begin seeing Bitcoin as a safer bet than the dollar. What he's saying here is, decentralized finance is incredible. It's great. Larry Fink, he wants decentralized finance to be successful. This is great. However, we know that we don't get decentralized finance, at scale and support it fully without digital IDs. On top of that, tokenization. World's money moves through plumbing built when trading floors still shouted orders and fax machines felt revolutionary. Again, he's talking about when we think about today's plumbing, everything needs to change. Everything needs to move on chain. Tokenization is that thing. He keeps pushing tokenization. And again, we always look at it from just one perspective, which is, this is great. It's bullish. It's going to make us money. But he even said over here, again, this is from April of this year, tokenization of the market from stocks to bonds to real estate is coming, says BlackRock CEO Larry Fink, if we can solve one problem. But one big cybersecurity challenge stands in the way: digital verification. In this document, or in this article, we could actually see, this is all from the annual letter. Unlike traditional paper certificates signifying financial ownership, tokens live securely on blockchain, enabling instant buying, selling, and transfers without paperwork or waiting, much like a digital deed. However, we won't get this big revolution without a coordinated digital identity verification system. This is very interesting, okay? Because, again, BlackRock is a part of the big push from the World Economic Forum. And if you guys know what I'm talking about, then you already know about, back in 2016, the World Economic Forum putting out the Fourth Industrial Revolution, what it means and how to respond, where they talked about this next big push being the digital push, the automated push, AI, blockchain, you name it. And this is where we see all of these technologies blurring the lines between physical, digital, and biological spheres. And even more recently, they put out a new document saying the same exact thing, highlighting the Fourth Industrial Revolution, where they're talking about AI agents and these new technologies. This is blockchain. This is AI. This is, DLT. All of this is a part of this big revolution, which is why we're starting to see the big support on it. Everyone's stepping on the gas, getting behind, tokenization, getting behind blockchain. Why do you think so? It's because they're all a part of the same move here. BlackRock is a partner of the World Economic Forums. BlackRock continues to push tokenization in a big way. at the same exact time that they're saying now that you need a digital ID. The financial services industry is focused on how to build a zero trust framework for identification. You don't trust anything until it's verified. The challenge is getting everyone together about which technology to use, and that makes it as simple and as seamless for the consumer as possible. And it's crazy because this is literally talking about digital IDs, having your ID online. Now, if we think about how crazy this is and how everyone made a huge deal over CBDCs, well, guess what? BlackRock's supporting tokenization at the same exact time that BlackRock's supporting stablecoins, which are exactly what CBDCs are anyways. But the biggest thing about CBDCs is, they could track and trace every single transaction. Well, now that your digital ID is on chain and tokenization is, rolling the world, guess what? They could track everything and anything back to your digital ID now. You see the big problem with all of this? And what's crazy is that BlackRock, we go back over here and we have, BlackRock saw the RWA wave before anyone else. No, they created it. Just like if we think about this video here, Larry Fink, I'm a huge believer in crypto and tokenization. I want the SEC to rapidly approve tokenization of RWAs. He said this back in January of this year. Listen closely.
As a huge believer of crypto and blockchain and tokenization, I want the SEC to rapidly approve the tokenization of bonds and stocks.
So he said this back in January. Okay, now we have over here today, SEC Chair Paul Atkins says tokenization is an innovation. My whole goal is to make things transparent. He just put out a document, Paul Atkins did, supporting the entire tokenization market. He even said that everything will be on chain. So we're going off of this whole idea of, Larry Fink saw this big revolution. He's been behind this for years. But listen to what Paul Atkins is saying here.
Tokenization is an innovation, and we at the SEC should be focused on how do we advance innovation in the marketplace. And so I would argue here over the last several years, the SEC has been standing athwart efforts to innovate in the marketplace because things have been unclear. The rules have not been clear. We've had regulation through enforcement. That day is over. We are now, my whole goal is to make things transparent, from the regulatory aspect, and give people a firm foundation upon which to innovate and to come out with new products, and so that they know what they're doing.
I think there are two things to think about, Andrew, and that's tokenization of U.S. stocks, which is one thing which could drive a lot of cost savings for all parties
I'm not against tokenization. I'm
saying
settlement
times would be reduced.
I'm talking about if you wanted to
tokenizing
SpaceX, which is a private company.
And then there's also an access to private credit, I think you were mentioning, which is a complete individual investor access to private credit, which is also another sort of tricky area in that this is also, as you mentioned, it's not as much liquidity. Valuations are very difficult, particularly, I would imagine, for an individual investor. There are a lot of things that here that are new frontiers for investors. Where do you stand on that?
Well, two questions. So as far as tokenization and other innovations in the marketplace to make trading and holding securities easier and with quick settlement, my predecessor pushed for what we call T+1, meaning settlement and clearance the day after the trade, the trading day. And so tokenization and other aspects of doing that tokenization in the marketplace is yet the next step to have much more efficiency in the marketplace and certainty of having a trade settle.
So again, the fact that we have the SEC chair talking this way about this new technology, after going through everything that we've gone through over the last couple of years, why do you think that we're starting to see this big shift? It's because all of the big players have been on board. This was all one big plan. Everything has been planned for years. That's why everything seems as though it's all planned out before we see it. It's because it's been happening. This has been pushed to us since going all the way back to 2016. when the Fourth Industrial Revolution document got released to us from the World Economic Forum. They've been behind this with their partners, like, for example, BlackRock. They are urging the SEC to get, this done. All of a sudden, a couple months later, boom, we get it. These things are not just by accident. They are forced into play by the big players that control everything. And guess what? That's why they want digital IDs. They want all of this stuff on chain so that they can get control. It goes back to the whole CBDC argument. Everyone thought that, CBDCs are bad because they can track and trace and control things. Stablecoins are the same thing. Stablecoins, digital IDs, tokenization, it's all a part of the plan. So with that being said, I hope that you guys enjoyed this video. If you guys definitely like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.